What if your life insurance never expires, no matter how long you live? Welcome back to Insurance Capsule, where we break down insurance into simple, everyday language. And if you are seeing this channel for the first time, you're welcome. Kindly subscribe, like, and comment. Today, let's talk about whole life insurance. Now, unlike term assurance, which covers you for a fixed number of years, whole life covers you for your entire lifetime. As long as you continue to meet the policy conditions, which is actually paying your premium regularly, your cover remains active. Now, let's see how it works. If you take a whole life policy and pay premiums over time, please note that the premium to be paid is based on your financial capability. The insurance company guarantees that whenever the insured passes away, whether early or much later in life, the agreed sum assured with accumulated interest will be paid to the named beneficiaries. Now, let's make this practical. Imagine someone who wants to ensure that their family receives financial support no matter when they pass away. With whole life insurance, there is no time limit like 10 or 20 years or 5 years. Even if the person lives to 80 or 90 years, the policy remains valid. And when the insured passes, the benefit is paid to the named beneficiary. Now, there is another important feature. Many whole life policies also build something called cash value over time. Is that not so nice? This means that part of your premium contributes to a savings component. Over the years, this value grows, and in some cases, you may be able to borrow from it, withdraw part of it, or use part of it for financial planning purpose. Let's bring this closer. If Mr. A buys an whole life insurance policy and he lives up to 90 years and then he dies, the named beneficiary in the policy will be paid the lump sum of the policy. But for example, he needed money during the course of that policy. He can walk into the insurance company, withdraw part of the money, borrow part of the money, and you can use the money for any financial reasons that he has given. So which means you can actually use your whole life insurance policy for both savings and protection. Because of this added feature and lifetime coverage, whole life insurance is usually more expensive than term assurance. But it offers something very important: certainty. In simpler terms, whole life insurance is for people who want permanent protection and long-term financial security for their loved ones. It is not just about covering a period, it is about covering a lifetime. This is Insurance Capsule. Do not forget to subscribe and click on the notification bell so you'll be the first to be notified when a new episode drops. See you on the next episode.